I want to buy dividend stocks while the buying is good. The current investing environment is really driven by technology stocks, especially semiconductors, pulling a lot of investments and catching a lot of the attention. Stocks like Nvidia, Broadcom are pulling in lots of investments. At the same time, people are ignoring and forgetting about these great companies that pay dividends. It's a great opportunity for a long-term investor like myself to pick up these companies at a discount and get really nice dividend yields in the process. I'd like to go over my top dividend stocks with you, share the names of the companies that I'm buying into, and tell you what the dividend rates are. All of these dividends the companies can afford, and all of these stocks are discounted, in my opinion. Before I jump into showing you the companies, just remember, I'm an individual investor. I'm just sharing my experience, my opinions. I'm not providing any financial advice. I'm not recommending you buy or sell any of the companies I'm going to cover. Also, let me introduce my sponsor, Mumu. They are sponsoring my channel, and they're offering a really nice new account holder program that includes paying you 8.1% on cash for 3 months. And then after that, it's 5.1%. They'll also give you 15 free stocks if you open an account with $1,000 or more. Take a look at the details in the video for more information. Now let's get into my top stocks that I'm investing in right now, buying more shares to lock in a great dividend. The first company is CVS. CVS pays a 4.4% dividend. This stock has been discounted over the past year. The company can clearly afford the dividend with a low payout ratio on that dividend. They produce very high amounts of cash, and they have consistently grown their top line revenue. That said, I believe this stock is discounted by 45%, and I'm going to buy more shares of CVS to lock in a great dividend and potentially see my stock really appreciate in value. The next company I'm going to cover is Caretrust, and Caretrust is a real estate investment trust. They pay a 4.4% dividend. A little reason why it's a little bit low compared to historical terms is that the stock's really gone up. I'm up 39% on my position of Caretrust, which is great. Now, this stock, I still believe it's discounted by 10%, and they can more than afford the dividend rate at 4.4. This company has increased their dividend over time, and it's just a really well-operated company. The next good dividend-paying company is Prudential Financial. They are predominantly a life insurance company, but they also do wealth management, and they sell annuities. This company pays a 4.4% dividend. They can more than afford that dividend, and the stock's appreciated nicely over the last year. I'm up 22% in the past 12 months on Prudential, and I'm being paid that 4.4% dividend. I still think there's upside in Prudential because they were a rebound story of 2023 and 2024. Their business is really on solid footing, and I think they're going to have a couple of good years in the future. Ford is the next company, and they pay a 5% dividend. And this stock, I believe, is really discounted. Ford has continued to improve their business. They have a great lineup of cars. They're profitable. They're in a really good position in the market. Their stock price has just really been sold off for some reason. But it's a great time to lock in 5%. And it's a dividend that the company can really afford. So I'm going to be buying shares of Ford and locking in that high dividend rate. 3M is the next company, and 3M is a rebound story. They had a rough couple of years if you look at from 2020 to 2023, but the company is really on the right path now. They're paying almost a 6% dividend, and the stock has really appreciated nicely over the last 6 months. I'm up 20% on the stock, and they're paying me 6% as a dividend. What else could an investor want? That's just a great recipe. I'm going to continue to buy 3M stock on pullbacks and continue to accumulate shares in this great company. And the final company I'm going to cover is Pfizer. Pfizer is paying a little over 6% dividend, which is a great rate. And this company has had a rough year if you look at their stock price, but their business has really been doing well. They really are growing their business organically, and they have just a tremendous balance sheet. They have so much cash on that balance sheet. So I expect two things. One, the Pfizer stock is going to go up in value. Two, I'm going to lock in that 6% dividend yield because that can really help my portfolio for many years. So those are my top dividend paying stocks. It is a great time to buy into these dividend stocks that are predominantly Dow-based stocks. These are stocks that are going to be more stable than growth stocks and likely will really have a very good 2024 and 2025. But the buying is just really good right now because these stocks have been left behind. If you look at how the Dow has performed versus the NASDAQ, it is way behind the NASDAQ. But I believe that the real surge in growth stocks within the NASDAQ, it's going to come to an end. And when that happens, I think these value stocks are really going to stand up tall and go up in value and continue to pay me a really nice income.